Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, good morning, everybody. Post non-farm payroll reaction we're dealing with here this morning. So for those of you that are trying to figure out what the heck happened at 8:30. So the first place I like to start off the trading day, well before I'm even thinking about trades, is looking at this calendar here at Forex Factory. It doesn't have to be Forex Factory. Doesn't mean we're talking about Forex, but remember, Forex mindset is more about a 24-hour mindset. What are the different events that are happening before 9:30, not only in the US, but outside the US? And this is a great calendar because it also helps identify the potential impact of the data. So you can see here, US, let me grab my drawing tools here. All right, here we go. So you can see here, US has three major events happening at 8:30. And you'll see right through here. The big one, of course, is the non-farm, right? But along with non-farm comes other data. The non-farm payrolls report is massive. It usually takes about 10 to 12 minutes to really parse through. But the headline number, that sort of big high-level number, is what makes the initial reaction. And so at 8:30, we all know this data is coming. So it's a hot zone because, one, it's impactful, in this case, macroeconomically so, more so than regular non-farm payrolls because the Federal Reserve has begun talking about a weakening labor market, and this is the metric. So expectations were for 75,000. We got 22,000. So you might say, Rog, that's quote unquote bad. Why is the stock market up? All right, so we're going to make some connections here. And once you see it, it'll make perfect sense. So we have this data. We know that the number was a miss. By the way, you might say, well, what about average hourly earnings? What about the unemployment rate? They're largely unchanged, and they were in line with expectations. So if you expected 0.3 and got 0.3, there's not a whole lot of reason to do much about it. This was the big number of the three, and this was where the big miss, as you can see, was. All right, so where does this take us? All right, this takes us to somewhere, I think, if you've been here for a while, we follow the data. That means 8:30, we're going to get jobs numbers. And because the Federal Reserve and a lot of the other members have been talking so much about the weakening labor market, and that would be the catalyst, that would be the reason they need to justify cutting rates. Well, that's a terrible print on non-farm payroll, and it's going to put the pressure on the Federal Reserve to cut. Now, this is a very different look on the target rate probabilities for September as we wake up this morning to this post non-farm payroll morning. All right, what do we know? Well, currently rates are at 425 to 450. So 4.25% to 4.5%. They might call that basis points, but just put a decimal after the 4. There's your percentage. So 4.25%, right, to 4.5%. So that's all that means. So if someone says 425 basis points, it's just 4.25. All right. Do you see how this is now 400 to 425? This represents, for the September 17 meeting, that we're going to see a 1/4 point cut. Now, I'm not predicting. This is the same way gold reflects that prices are currently at 36.39. Well, this reflects what Fed Fund futures are saying, and their whole reason for being, where people are putting real money to work to say, I'm making a bet on what the Federal Reserve is going to do in roughly 12 days, right? So what they're saying is, no, they're going to cut. And that's why this increased to 88%. You might say, well, why isn't this 100%, Rog, if we're so sure? Great question. The spillover. Now, remember, these are futures contracts. People are speculating. They're speculating on the data just like we would. But rather than playing S&P and NASDAQ and so forth, they're playing Fed Fund futures. That spillover has now come down to a potential 0.5 point cut. Right? It's only 12%. So let's not get carried away. On television, they'll just make it generic. They're looking at this data at television, right? But rather than say, look, we're looking at Fed Fund futures, and here's the chart, and you can look at it on your own for free on the interwebs, they're going to start, sounding very smart and say, well, it's a quarter point chance, but there's a chance the Fed could cut 12%. Yeah, it's 88% to 12%. So this is the probability. Is there any chance being factored in for a hold? None. None. Now, we go to the next step. Does the stock market like this? The stock market loves cheap money. The stock market loves lower borrowing rates. So this isn't up because of a bad non-farm payroll, right? Bad non-farm payroll increases the probability for a rate cut, and not only increases the probability for September's rate cut, that's been pretty much baked into the cake for a bit, right? It's factored in, it's discounted. But what's interesting is you go out to December, right? You go out to December and you'll see that this is sitting at 67.2%, this column right here. And that is 3.5 to right here, 3.5 to 3.75%. Well, that's lower than where we are right now. So this is the rate cut in September. This is a rate cut in October. The Federal Reserve takes November off. This is December. So we are looking at expectations. This is not foretelling the future, but based on what we know right now. Remember, we're going to get non-farm payroll next first Friday of the month, the next first Friday of the month. So we have a lot more non-farm payrolls to go, and these will adjust. But right now, this is definitely putting the pressure on the Federal Reserve to cut at the next three meetings, September, October, and December. And again, the stock market is generally going to like that. And that's where we start the morning off. So here we are, punching up. Oh, new high. I've been saying for a while, when people start talking about market internals and things like that, the best market internal is the market itself. And you look at the sectors weighted within the index. And here we are at a brand new all-time high. This is not the time to be bearish, gang, right? Our watch lists are bullish. Most of the sectors that are weighted within the indices are in positive territory. When you look back over the course of a month, this is not the time to be bearish. This is not the time to say, well, isn't the stock market extended? Uptrends are by nature, quote unquote, extended. There's no such thing as too high. And ultimately, what hurts a lot of traders is this thinking that, well, something's gone too far up, so let me short it. And if something is in a trend, that's categorically just the wrong, wording to use, right? Overbought, oversold is perfect in chop. It's perfect to describe a market stuck in a range. But once we start moving to higher highs and we have a trend, overbought and oversold doesn't take on the same really meaning. It's just really a matter of, are we pulling back to support? So we stop using the jargon of chop. We start using the jargon of trends. That's where we are, gang. So does everything like the jobs numbers? Well, here's another thing that's going to happen in about 2 minutes. Remember, there's a huge group of traders and investors that can't do anything at 8:30. If you and I are futures traders, 8:30 is liquid, open, ready to go. If you're a Forex trader, a market trades, its day is 5.5 days long. So that's open, but the stock market is not open. Stock options are not trading. So even though there's pre-market, it's very low liquidity. So now that the bell is going to ring here in about 90 seconds, what happens is there's a whole other group of traders that are now going to say, hey, this is what happened an hour ago. That's bullish for all the reasons that we just talked about. And I look at that as an echo. So what that means is stock traders now have a chance to say, hey, I'd like to buy this or not buy this. I would fully expect that candle of unusual size, that larger candle at 9:30. But generally speaking, we should just see a continuation. I'm not saying we're going to see a move of equal size again, but I don't think stock traders are going to come in and be bearish on the morning where futures traders were bullish and rallying the indices, rallying gold, rallying silver, and rallying bonds. Right. And that's where we sit. Now, you might say, Rog, but isn't 22,000 bad? And don't worry about going through the data to trying to figure out a trade. The timing affects when we are looking for certain kinds of data. The data affects price action, and price action is a great distillation of sentiment. Think of it as a meter, right? Think of it as a meter. I have this EMF meter thing I bought for the office because I got the craziness of monitors and everything else. And I don't really understand. Not really. I mean, I get the gist of it, but I don't get what an EMF is. Not really. But I got this little meter that tells me if it's high or low. That's the way I look at price. I don't have to understand every little nuance, of what's going on in terms of why the stock market is up and repos and that. I don't need to understand all that. I know the distillation of that is here in price. Now, if you are in the Sector Secrets Mastery, you know that we don't stop at price. What else can we distill? Volume, that's participation, that's attention. We can look at volatility, the hourly price movement ranges. We would expect to see a huge candle at 8:30 with non-farm. Did a very good job containing price action with the volatility-based support and resistance. What's the typical price movement range of a symbol? That's volatility, right? And then, of course, time, which we've talked a lot about. Those are the four factors of the market. Those are four factors of the market that level the playing field in a way that nothing else can. Information, people are going to get that at different rates and at different detail, right? Information is not a level playing field. Speed, right? Speed is not a level playing field. So what I'm going to do is I'm going to go out to where the playing field is level, and everybody is going to be affected by price, volume, time, and volatility. And that's where we get our edge, right? So that's kind of where we are right now. And we'll see what is going to happen next. All right. So let's see. The only open position that we have out right now, and I realize I sent out, I copied and pasted the Wednesday. Darn it, I screwed up there. Yesterday we talked a lot about, and I forgot to update this on the recap. I'll fix it a little bit later. Yesterday we talked a lot about our sole open position on CVX, and I know a lot of you said, "Hey, Rod, this position's up at that 25%." Target, it didn't hit the target itself, right? So I know a lot of you scaled out. Yeah, we're going to end up having to close this morning, right? So most of you are at break even. This may not be a break even close, but yesterday it went up. It was a decent swing, good follow through, but crude is still pretty heavy. And yeah, and CVX in general. Let's see, XLE. Nope, come on, XLE. Today's toss just doesn't really want to talk to my keyboard. All right, come on. There we go. XLE. There we go. Doesn't seem to like it all that much. So yeah, I agree. Who mentioned oil and oil stocks don't seem to love the yeah, they don't. But look, all I need is a little bit of follow through. We got that yesterday, but by 9:45 we'll go take a look at CVX and see where it's at. I'm not looking to enter CVX. Remember, that was that day only. That was that day only. We were also looking at NXT. We might take a peek at that one. We were trying to set that one up. It never came back. Look at this thing gapping up. So now that we have every single day through 5 days of September, remember, it feels maybe like a long time ago, but we just got out of the mid-summer, the late summer doldrums, the beginning of this week. So we're 4 trading days into the week, not even a completed 4. And we're finally starting to see a whole lot more by way of macroeconomic clarity, a lot more about what the Federal Reserve is going to do. We've got the bulk of earnings in the rearview mirror. I mean, September is going to be a good month. Yeah, September is going to be a good month. So in terms of clarity, and now we're just going to stick with our process. Our process does what? Have we been bearish, gang? No. I'm not as active as I'd like to be, but frankly, it's been pretty volatile. Tuesday was bonkers. Friday here with non-farm payroll, pretty volatile. But we know more than we did on Tuesday. And August, we know, is the trickiest month of the year, especially the last 2 weeks. So we're just getting started with the fall trading season, and I'm pretty stoked about it. So our long watch list is still the one that I want to stick with. At the moment, I'm just looking to see what, if anything, is setting up on the broader averages at the moment. So we've got non-farm payroll out of the way. We had a bit of a tariff-driven tantrum on Tuesday. Monday was a bank holiday. So far, we're getting a lot more clarity. Clarity is what's going to lead to follow through, and that's going to be the perfect environment for setups. All right, so don't lose focus, or certainly don't lose hope on September and the rest of this year, because we're seeing a lot more clarity. The Federal Reserve is being very coy about what they can and won't do. Now, non-farm payroll said, look, you're going to cut, and everybody knows it. Okay, so we see all-time highs on the S&P. I'll tell you, this is where, let's shift gears just for a moment, because I don't see a day trade anywhere within sight quite yet. I am looking at silver. I'm looking at gold for potential buys off of Darvis. So let's do this. Silver's on the radar. Gold's on the radar. Russell, we got a nice Russell Darvis. That's on the radar. Okay, so that's on the radar right now. And then what sectors are moving higher in trends? They're not all, right? No surprise, as the NASDAQ is pretty strong, we've got strength in the two strongest sectors in the NASDAQ, communications and consumer discretionary. Industrials are strong this morning. Metals and mining are strong this morning. And funny enough, staples and utilities are too. So we'll see if there might be some clarity in those groups. But on mornings like this, I'll tell you, we're not just day trading in the Sector Secrets Mastery, are we? And we're not just swing trading. The swing trading hasn't been that active because I'm not going to get into that illiquid, uncertain time at the end of August. This week has been a lot of symbols on our watch list, just not a lot of triggers. And follow through is still kind of the way that it's been. We're still sort of getting ready for fall. But what I love, and I think a lot of you know where I'm going to go right now. We have a third style that we use, right? And that third style is looking at weekly time frames. The weekly book is up nicely, right? XLV up nicely. Even TLT is coming back around, right? Look at the positions that we've taken in the last even 3 or 4 months. If you want to go to Q1 of this year, what are the symbols that we put on this year alone? And these are long term, so I'm not going to have 40 of these, although we have quite a few. But look what we've done this year. We're long Coke, Altria, Nextera, which I have cut. It did not make the team. It wasn't down by a whole bunch, but it did not make the team in terms of that requisite amount of percentage that it needs to be up by 6 months. SPY, absolutely in fuego. We bought that. You can see XLC, Walmart. So these are up really nicely for us in terms of, and I got to remind myself to update an EE on that, remove it. I took a 2-point loss. So not 10%. I took a 2-point loss in NEE and closed it. Said, look, this is tying up capital that I could be putting to work elsewhere. I sent out a lot of long-term account growth setups this week, as well as the top tier outlooks. Remember, sometimes it may be kind of meh on the swing side or even the day trading side, right? But that's always going to be something we can keep focusing on. And one of the things that, in terms of, actually, let me just show you here. One of the things that we want to keep an eye on these long-term account growth setups. And remember, the first Tuesday of every month, we just had that long-term account growth session Tuesday of this week. Remember that what else we're doing in that is we're looking at the weekly, we're very bullish, and we're waiting for those setups that'll come back and give us a weekly trigger. Same tools, gang, right? We're not changing the process. We got into Darden restaurants all that long ago. We're kind of sitting and waiting for it to get going, right? But there you go. It's starting to move. That's what we're looking for, moves where there's some certainty about the weekly follow through. And that's not something I need to keep an eye on day after day. I'll send out the alerts. We sent out what? Actually, let me show you what we did this week. For those of you saying, yeah, Rog, I'm kind of new to the room. What is it that you're looking at long term? And I'm still looking for some day trades, gang. It's a couple things. Silver might be getting close. Might set that up here. But let me give you an example, and then I'm going to go take a look at silver. A lot of you have been asking me about IBM. And if IBM's heading higher today, let it, right? But one of the things we're looking for is a move into the range down in here, you can see those lines down in there, where if IBM sinks down to 230, 335 to 230, 280, I'm looking to get long IBM, not for a week, not for a month, but for 6 months to potentially a year, or you can buy leaps in that window. So please, 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 I know that a lot of traders like to focus on the short-term stuff. Never has there been so much interest in probably day trading and 0 days to options expiration. And yet, some of these longer term positions where we're willing to hold for months, if not years, can really be a powerful part of your overall trading approach. Okay, so let's shorten it up. I kind of went big picture there for a minute. Let's see what we've got here. It's been 10 minutes. We let the first 5 to 10 minutes go by. Volume comes in. The spreads narrow. Got a pretty good idea of what the equity markets want to do. I'll be circling back to CVX here in a moment. But, taking the first 20 minutes that we do from 9:20 to 9:40 and take an overall assessment of what we're looking for, what the macro is saying, not just day trading, but some of the long-term stuff too, that's going to give you a really good amount of traction to say my whole trading future, my whole trading fortunes are not in one symbol or one style, but rather multiple things we can do that are synergistic and don't necessarily take away from the other, right? I can day trade while having a long-term position in, the S&P, which we do, right? So those are really important things to keep in mind. All right, let's get on with our trading day and see what we've got. But silver is on the radar, and I'm going to be looking at this Darvis level here. So let's see what we can do with SLV as we continue through our morning. All right, what do we have here?